Office phone is charged. Okay, right. So guys, very good afternoon to all of you. Let's start off in another 2-3 minutes time, guys. We'll just wait to see which others are joining. Okay. Yeah. Right. So guys, and let's start then the session. So now already guys, I think you are well aware of your paper structure. Okay. So your paper will consist of number one, uh, 35 questions. We call it as section A, which could come from any part of the syllabus. Then you have on the other hand, guys, section B. So section B is where we have uh, two questions where it will most likely come from this area called consolidation, and the other one it could be a topic like the one that you see here. Maybe it could be financial statements, adjustments to income statement and SOFP, or maybe it could come from cash flow. So these are the two areas that we have. So next Monday I will be guys discussing with you all questions related to consolidation. So the plan what I'm having in my mind is this: today we will focus on adjustments related to financial statements, like to the income statement and SOFP of a single company. What are the things that you can be tested on? Week 2 will focus on consolidated SOFP. Week 3, consolidated income statement plus cash flow. And then maybe we can go ahead and try a mock paper kind of thing and see, guys, just to see whether we are comfortable with the syllabus. So today, guys, then we'll start off with a section B related question. So I'll share the materials once I'm done with the class. I think we have a separate group for TRJ, so I will share according to that. Right, so just give me a minute. I'll quickly connect this laptop to the charger and guys, we'll start. Okay, right. So guys, then let's start that one. Okay. So guys, first we will do some questions from the exam kit. Once that is done, I will guys show you a mock exam paper, like how the questions will come in on the exam uh, using the exam platform. Okay, so that's the question that you were seeing on the screen when I started the meeting. That's the specimen exam one. So we'll keep that one. First, we'll start with a little bit of a basic question, build on it, and then we'll move to the tough one. Right. Okay. Now, guys, like this, you will be getting section B, a multitask question, right? Where you will have approximately, guys, roughly, let's say 5 questions. Okay. So 5 questions coming from the same area, But just that, guys, these will be what you can say tested from different parts of syllabus. So normally, guys, when you do the FA exams, not only FA exams, any ACCA exam that you do, guys, you need to have a thorough understanding on all parts of syllabus because it's like equally tested. Okay, so let's have a look at, guys, over here. ICE Corporation, task number 1. Right. Okay, now they have, guys, given over here ICE Corporation. The following is an extract from the trial balance of ICE Corporation of an entity as at 31st of December 2001. So they have given us, guys, some transactions from the trial balance. Right, required A part. How should the following items be classified in the statement of profit or loss? So normally, guys, in your exam, what happens is they will give you a button to choose the options. Now over here, guys, it has like just been given in a box, no? Right? In your exam, how it will come, they will, guys, give you like a select option. So maybe when you click on this button, you will get 3 options: cost of sale, distribution, administration expense. You just have to click that. So I'll do and show those questions, then you will have like a better understanding, right? Can you guys, I'll give you a minute time. Can you quickly decide the answer, guys, for this part over here? Right? A minute. Okay, done. So guys, have you selected the answer? Right. So what does it say over there? So it says, guys, number 1, carriage inwards. So guys, normally carriage inward, guys, what does where do we normally mark? Normally, guys, carriage inward, we mark it inside cost of sale. Correct or wrong? Done. So we select that. So in your exam, once you click, you select that option. Carriage outward. So normally, guys, carriage outward, where do we mark? Normally, guys, carriage outward, we mark it inside distribution expenses, because, guys, carriage outward is the cost of sending the sold goods outside. So because you're selling, and because of that, now, guys, you are incurring the cost. So therefore, guys, remember that needs to be marked inside cost distribution expenses. Any expense related to selling a product, like marketing, advertising, depreciation of vehicle, most of the time discount allowed, sales commission, all these, guys, we put inside distribution expenses. Right now, guys, let's go to the next part, part B. Right now, guys, part B, they are asking, using the above information, what is ICE gross profit? Okay, now, guys, normally in accounting, how do we calculate gross profit, guys? Right? So normally gross profit is equal to what? Gross profit is equal to sales minus cost of sales. Okay, right. Now, guys, normally how do we calculate cost of? So normally, guys, we have sales. Then from sales, we have to subtract sometimes return inwards, sales return. Then you will get your net sale. Now, once you get your net sale, guys, what is the next thing that you have to do? You have to focus on cost of sales. So cost of sale, guys, normally what's the equation? We have opening inventory, then purchasers. Then, guys, after purchasers, we have, sometimes we have to add carriage inward. Then we have to subtract return outward. Then, guys, sometimes there is drawings of stock, but I don't see that over here. Okay. And then, guys, on the other hand, we have to deduct what? Closing inventory. So you need to, guys, know the equation. Okay. Closing inventory. Done. Okay. Now, guys, by looking at this particular equation, guys, what I have given you, can you guys please calculate and show me, guys, over here the cost of sale value, guys, faster? Okay. Sorry, not the cost of sale value. I want you to calculate the gross profit value. I'll give you 2 minutes. Copy the equation down and, guys, start on that one, please. Okay, right. So, guys, I also will then work out the question with you itself while you all are doing. Right. Number one, guys, we need sales. So normally, guys, what's another one name for sales in accounting? Right. Another one name for sales is revenue. So take that one, guys. Okay. So the revenue is 600,000. Mark that first. Done. Minus return inward. So normally, guys, return inward, do they have they given? Yeah. Here, guys, can you see return inward is 500,000. Okay. So subtract 500 then. So therefore, guys, the net answer for the return will be none other than 595,000. Okay. Now, guys, once you get the net return, the next thing what you should do is start finding the numbers over here. Right. Now, guys, we have opening inventory. So here, guys, they have given one inventory over here. Then there is another one inventory over here. So there are two types of inventory. So check the date. Jan, December. So it's pretty obvious. Inventory on January. This is what we call, guys, the opening stock. Correct or wrong? 1st of Jan. Okay. So guys, then mark it over there. Inventory on 1st of January is 24,000. This is the answer. Okay. Right. Then guys, on the other hand, purchasers. Right. So normally, guys, over here, then purchasers is 240,000. No, guys. So purchase, just copy it over here, 240,000. Right. Okay. Then guys, over there we have carriage inward. So normally, guys, carriage inward, just copy it over there, 2,000. Done. Right. Then guys, search for return outward. Right now, guys, over here, do we have return outward by any chance? No. Return outward is not there. So just put dash, guys. If something is not there, just put dash. Right. Then guys, we have closing inventory. Okay. So closing inventory is, guys, the one that they give here. Inventory valuation on 31st of December is 30,000 minus 30. Done. All right. Okay. Now, guys, let's start calculating then. 24,000 plus 240 plus 2 minus 30. Okay. So remember, guys, don't at once do the calculation. You do it separately. Normally, opening stock starts from here. Sorry, cost of sales starts from here. Okay, so do the calculation. So, guys, I'm getting 236,000. So then, guys, what you do, 236,000 deducted this one over here. Right. Okay. Now, guys, what you do, get your gross profit. So normally, guys, how do you get gross profit? Gross profit is sales minus cost of sale. Right. Now, guys, can you get your answer? So sales minus cost of sale will be 500 and guys, over here I made a small mistake. 600 minus 500 is 599,500. Okay. 600 minus 500, 599,500. So 599,500 minus 236,000. Answer is, guys, 363,500. Right. Okay, so this is going to be your answer, guys, 363,500. Done. Okay, so that's it, guys. So we can mark the answer over here, 363,500, which is gross profit. Done. Okay, then, guys, on the other hand, over here we have C part. Using the information available, identify the adjustments that is required to do the gross profit to calculate profit before tax. Okay, now, guys, what they're asking, from gross profit to get profit before tax, what do you need to do? Okay, profit before tax, to convert that into profit before tax, what you need to do? So these what, guys, normally we do know, right? We have gross profit, right? So normally, guys, after gross profit in the income statement, what do we have? Other income, right? Then, guys, after other income, what do we have? Then we have to subtract distribution expenses. Sorry, let's go up once again. Okay. So then, guys, after that one, we have to subtract from other income distribution expenses. Then what we have to subtract, guys? Administration expenses. Then we have to subtract finance expenses. So then we will be able to arrive at PBT. So what is PBT, guys? PBT means profit before taxation. Okay. So this is the equation, guys, that you need to know to find profit before tax. Okay, now guys, the gross profit, they have given gross profit, gross profit, gross profit. Now it's your responsibility to go through these and pick up the other things what they need. Like now, guys, I have given you the equation. So based on this equation, please pick up the other numbers that you need to get your PBT. Right, a minute time. Can you guys start selecting your answer over there quickly? Okay, right. Can you guys now check your answer and see, guys? So see, first one, guys, now every option is gross profit, no? Other income. Now, guys, do we have an other income in our question? Right now, guys, already now we have taken all these, no? So whatever that we have taken, guys, we'll tick that. Okay, then it will not confuse us. Right. So we have already taken revenue, already taken inventory, already taken purchases, carriage inward we took, return inward we took, inventory also we have taken. So now, guys, from these three remaining options, I do not see anything called other income. I don't have another income in my question. So we can forget that. So there is no other income. Right. Distribution expenses. Do we have a distribution expense? Distribution expense. Yeah. Okay. So that means, guys, it's going to be then minus 180. Sorry, distribution cost minus 75. So do we have a 75? So I'll just mark it and keep then minus 75. Okay. Then, guys, on the other hand, what's the next one? Administration. Do we have an administration? Yes, here, guys. The administration, then let me put it here. Okay. Minus 180. Done. Then, guys, on the other hand, we have what? Finance cost. We don't have finance cost, but there is a carriage outward. Guys, understand? I said you guys over here, no? Carriage outward is a distribution cost. So this carriage outward also, guys, should come over here, meaning minus 3. Right now, guys, we need to select an option that way. So gross profit is already there. There is no other income in our question 0. Minus 75, minus 3, 1, minus 180. Minus 75, minus 3, and minus 180. So therefore, guys, Roman number 3 should be the correct answer. Okay. Gross profit, that is this. Other income is not there. 75, minus 3, minus 180, minus 3, minus 80, minus 75. So this is how, guys, you need to pick up the answers, guys, for the questions. Okay, so I'll give you guys a few seconds. Can you check and let me know, guys? A, B, C. Any doubts that you have that you want me to clarify, please tell, then I can explain. If not, guys, we'll move towards the down parts of this paper. Okay. Okay. So, guys, seems like y'all are okay. Right. Let's move to the next part, guys, then. Right. Done. Okay, now, guys, before we start the next question, I want you to, guys, read this part carefully. Now, see over here. The following is an extract of the trial balance as at 31st of December 2001. So remember guys, this question we are doing for 31 December 2001. Got it? Question is for 31st of December 2001. Okay. Now guys, keeping that in your mind, if possible, can you calculate the interest, and guys, can you select the option on where should the loan be marked? So this paragraph, when you read, there is an interest calculation. So I want you to calculate the interest and mark the answer here, or decide the answer for yourself. Then guys, on the other hand, there is a B part. They're asking you the loan. Normally, where does the loan go? Okay, right. Can you guys just take a minute or a half, minute and a half to try this answer guys over there, please? So guys, I remember what I said you, the question is only until December. Okay, the question is only until December. Okay, right. So guys, then shall I explain how the question is done? Okay, look at that one, guys. Right, now what I said to you guys, first one, this question is finishing in December. Okay, so 31st of December 2001 is where the question is finishing. So over here, guys, we have 30. So it starts on 1st of January 2001. Okay. On 1st April, they raised a loan. Okay, so when did the loan get raised, guys? 1st of April. So 1st of April is somewhere here. So guys, understand, when you raise a loan in April, okay, from April to December, okay, from April to December, there is only 9 months remaining. Okay, if you start something on April until the financial year is finishing, there is only 9 months. So therefore, guys, what you need to do is like this. Right, take the loan, which is 100,000. So they are asking to calculate interest. No, so to calculate the interest, first you need the loan, 100,000 loan, multiply by 6%. Now you guys know by at this point, the 6% is the annual rate for 1 year, but we haven't had this loan for 1 year. We have the loan only for 9 months. So therefore, guys, what you need to do, into 9 divided by 12. So therefore, guys, 100,000 into 6% is 6,000. 6,000 into 9 over 12 is 4,500. So 4,500 will become the interest. That is your answer. Right. Then on the other hand, next question. How should the loan be classified in SOFP? Right. Okay. So Adil, to answer that question over there, it's like this. Now, when you go to this question, right. Right. Now, this question we are doing until 31st of December 2001. Okay. For an example, now when you take the gross profit we are doing for 31st of December 2001, our profit before tax. So the entire question we are doing until 31st of December 2001. That is the reason why only until December we went and took the interest calculation. Okay, that is the reason, because on top they said trial balance is for that date. Okay, no, right. All right, guys. Then next part, guys, over here they are telling how should the loan be classified. Normally, guys, a loan is what? Normally, a loan is a non-current liability. So this has to be the answer for the non-current liability. Okay. Right, that part is done. Okay, now guys, go to task number 3. Task number 3 is a question that is coming from this lesson called IAS 37. Right, now guys, IAS 37 is related to what chapter? Provision, contingent assets, and contingent liability. So there are 3 things. So first, let's try to answer the question. Then guys, I will give you all the explanation and the correct answer. And also I will show you a small short note. So since the session is being recorded, you will be able to watch that. Or maybe you can take a screenshot of the note when I'm showing it to you. Okay, so take a minute time and guys try and see task number 3, please. Okay, then guys, shall I discuss? Right. So on the 21st of June 2002, ICE Corporation received notification from a customer that they have suffered injury as a result of one of their products. Customer made a claim for compensation. Now guys, thing is this. When you do this lesson called provision, contingent liability, and contingent asset, first of all, guys, decide in the question, are we facing an asset situation or a liability situation? Now, guys, our product no damage the customer. So therefore, guys, over here, the customer is making a claim mean this is a liability. Got it? 5,000, where the legal advisors have confirmed that it's virtually certain. Guys, remember, if a liability is virtually certain, in accounting, we have to provide. Okay. So there are, guys, normally when it comes to a liability, 4 possible situations. Virtually certain. What is virtually certain? More than 95% of the time it will happen. Then we have something called probable. More than 50% chance it will happen. Then we have something called possible. Less than 50%, more than 5% it will happen. And then remote. Okay, so what is remote? Remote is less than 5%. So like these, guys, there are 4 possible things that we can have. Okay. So therefore, guys, now what you need to remember is that for all 4 situations, we have different types of treatment. Okay. For all 4, we have different treatment. I'll show you that short note which I have. So in our case, if it is virtually certain, we have to provide. What is the meaning of the word provide? Provide means you need to consider this as a liability as well as an expense. So what will happen, guys? Expense account will become debit, liability account will become credit. That's a liability. Okay, that's a double entry. Expense account will become debit, our liability account will become credit. That's the answer. So in simple words, virtually certain means we have to provide, meaning record as a liability and expense. Now let's check and see, guys, what they are telling. So it's a liability, see, it should be recognized as a liability in the financial statement. So therefore, Roman number 3 should be the correct answer. Now, guys, if you're someone who is like not completely sure about this lesson called, guys, provisions, contingent liabilities, here, guys, now on screen, I will share a small short note with you all. So this will guys help you to understand how to pick up the answers. Okay. Right. So guys, it is by using this particular table that we pick up answers. Here guys, this table. Now, normally if it's a live, now you saw now guys, when I started the question, I first checked whether it's a liability. So normally guys, when something is a liability, there are 4 options here: virtually certain, probable, possible, remote. Likewise, if something is an asset also, there are 4 possible situations. So guys, remember, provide. What is the meaning of the word provide? Provide means, now like how I explained, you have to take it as a liability and an expense. What is recognize? Recognize means you have to take it as an asset and income. What is disclose as a note? Disclose as a note means you're not passing double entries. You're just marking it and showing as a disclosure note, telling that, this much of a liability is there in our company. Like that, guys, you have to show a small note. That's it. That is all what you need to do. Okay, and then ignore means, guys, I don't have to explain. No, right? So anyone, guys, who want to have a summary of the lesson, this is what you need to learn for the exam. You can take a screenshot, or maybe, guys, for an example, anyway, these recordings will be available. So you can just go through that when you're free, even at the one time. So that's how I picked up the answer. It was virtually certain, so it's provide, then it's a liability and expense. So that's how we selected the answer. Okay. All right. Let's move to the next question, guys, of the exam kit then. Right. So we have done this. Okay. Right. Now, guys, let's go to then, guys, over here, task number 4. So task number 4, guys, is coming from this lesson called capital expenditure and revenue expenditure. Right. Now, guys, understand, capital expenditure means what? When you spend, and if that spending is going to give you long-term benefits, that's what we call capital expenditure. Okay. If you spend, and if that spending is going to bring you long-term benefits, we call it as capital expenditure. So in accounting, capital expenditure is actually an asset, non-current asset. Examples: purchasing a new machine, purchasing a new non-current asset, installing new non-current asset, okay, installing, transporting, right, of new non-current asset. Then for an example, guys, maybe modifying the non-current asset, okay, modifying to give benefits, or maybe renovations to give benefits, okay. So these are what we call, guys, what you can say, capital expenditure. You can, guys, even tell like this also. Now, sometimes when we buy a new non-current asset, we have some legal cost, no, right? Legal cost of new non-current asset. All these are capital expenditure. Then, guys, on the other hand, there is something called revenue expenditure. So revenue expenditure, guys, will give you short-term benefits, meaning the current level of benefits that you're already getting. For an example, guys, let's say you paid building rent. Now, normally when you pay rent, you can get the benefits for short term, for that particular month. That's it. More than that, you're not going to get any benefits, no. So these are what we call, guys, revenue expenditure, right? Expenditure that you need to keep recurring. You need to keep paying. And the benefit that it's going to give you is simply going to be that particular level itself, nothing more. That's what you call, guys, revenue expenditure. All okay? Right. Then, guys, on the other hand, remember, in accounting, revenue expenditure is always an expense. So what are the examples of revenue expenditure? Guys, remember, on the income statement, any expense that we mark, salaries, advertising, marketing, any expense that we mark in the income statement is a revenue expense. Right now, guys, based on the explanation that I gave, can you take a minute time and try this one, guys? Task number 4 over here. So task number 4, you have to decide whether it's capital or revenue. Read and see whether it's going to give you extra benefits. If it's so, it becomes a capital expenditure. If it's not going to give you extra benefits, it will become a revenue expenditure. Okay, now guys, can you then start answering that one? Okay, right. Can you guys check and see your answer? So first one, guys, work to install additional high specification electrical power cabling so that additional plants can become operational. Now see guys, you're now trying to do all these why? So that you can put extra plants. If you put extra plants, more benefits. So it will become a capital expenditure. Replacement of some tools and damaged tiles following a recent storm. Okay, now guys, you replace the tiles. It doesn't say that we are going to get any extra benefits. So meaning when the roof was there, that same benefit only we will be getting, not anything more. Okay. So therefore, guys, that would become a revenue expenditure. Repainting. That's also, guys, revenue expenditure because once you paint, it's going to give you the same benefits that you always had. Nothing more. Okay. Right. Roman number 4. Modifications to the factory entrance to enable a large item of plant and equipment to be installed. That will, guys, become a capital expenditure. Because if you do that, you'll be able to get a new machine. That new machine is going to give you extra benefits. So because of that, guys, that will become a capital expenditure. Right. So these are the answers for that. Okay. Then, guys, last question of this big one. Right. So after we finish off this, then guys, we have answered a full 15 marker. Right. Yeah. Yes. Now to answer that question, it's like this. When you change the roof tile, yes, the tiles will stay for a long time. But the question is, when compared to earlier, will you be getting any extra benefits from that? Okay, now for an example, now once the roof was covered, you used to get some benefits now. Now the roof got damaged, you replace the tiles. So when compared to earlier, do you get any extra benefits? No. You're going to get the same level of benefits that you got earlier from that protection. Nothing more. Because of that only, we are going under revenue expense. If they had said when compared to earlier, now for an example over here, let's say now when we go behind, 1 minute. Right, this part over here. Now, normally this one, now even putting electrical cable is revenue. But it became capital because it's to put a new plant. Then that plant will give us more benefits because it can produce more products. Modification to the factory entrance is normally revenue. But the reason we consider it as capital is because it is going to give you more benefits because a new plant is coming in. Whereas over here, it's only replacement. If now in this question, if they had said replacement is giving us more benefits than earlier, I would have considered it as capital. But it's only going to give us the same level of benefits. That's why it's revenue. So over here, when we say long-term benefits, it's about, are you getting something more than what you used to get earlier? then it becomes capital. If not, it's always revenue, right? So based on that only we selected. Okay, then guys, on the other hand, yeah. So guys, one more question. So always guys, remember this section B, one question will have 5 tasks, right? At the completion of 5 tasks only guys, the question is over. That means like you have finished a major part of the question. Okay, now guys, can you try over there guys, the B part over here. So it's very easy guys, a simple question. Calculate depreciation for the land and building and plant. Okay, now guys, okay, first you try and see. After that, I will explain what are the basics that you need to focus on. So what you should do guys, simply calculate depreciation. Okay, start calculating the depreciation guys. I'll give you around 2 minutes for this question. So be careful guys. There are 2 assets. One is building, another one is plant. Okay, right. So guys, check and see your answer. Number 1, freehold land and building cost of the land is 70. Now guys, you have to be careful in accounting. Now freehold land and building is 120 now guys. Okay, so land and building is 120. Now guys, understand in accounting, land we never depreciate. Okay, land is something that we never depreciate. So therefore, what you have to do, you have to remove the land from this equation. Okay, land is something that we never depreciate. Okay, right. So therefore, guys, balance is 50. Got it? Balance will become 50. Right. Then guys, on the other hand, now let's start doing the next part. So then they are telling, sorry, once you remove the land, building becomes 50. Plant is 120. Plant, not a problem. Freehold building is depreciated on straight line method in useful life 50. So guys, normally what we have to do, take the cost of the building, divide that by 50. So therefore, guys, answer will be 50,000 minus 50 is equal to 10,000 rupees. So that's the answer, guys, for the building. Simple. Cost divided by useful life. Whereas if you're guys doing for the plant, now plant, what they are telling, reducing balance method. Now normally guys, what's the reducing balance method equation? Cost of the asset. What's cost of the asset? 120,000 minus what? Depreciation, accumulated depreciation 15,000. And that one guys, we have to see how much percent, 15%. So therefore guys, 120,000 minus 15,000, right? It will become 105, and that into 15% guys, answer will be how much? Answer guys will be, I think, 15,750. Yes. Yes. Small calculation mistake. No, guys, over there. 50,000 divided by 50. Yeah. So, guys, over here, I think answer has to be 1,000. Thank you. It has to be 1,000 over here. And over here, guys, it has to be then 15,750. 105 into 15%. Yeah. 15,750. So those are the two answers, guys, that you have to type over here actually, right? Freehold building 1,000 and plant is going to be 15,750. Done. So guys, then with that, we have done now one full question on section B. Right. So guys, then we'll do a few more questions from the exam kit. After that, we will jump into what you can say, the exam platform CB, what I showed you, then you can like have an experience of a real exam question. How would it be? Okay, right. Now, guys, let's go to this question, guys, over here. Question number 2. Okay. So, guys, this question is coming from this lesson called sales tax. Okay. So, that is similar to something called VAT that we charge in Sri Lanka. So, over here, guys, we call it tax. Sales tax. It's basically the same thing. So, they have, guys, given you a question on that and they are asking what is the double entry related to taxation. Right? Can you little bit try and see? And then I will explain the concept behind taxes. Okay, done with that part, guys. Shall we discuss and see? Right. So what they're telling, you have discovered that several purchase invoices have not been recorded in purchase day book. The total value of the invoices is 2,300, including sales tax charge at 15%. Okay, now guys, normally this is what guys you need to do. Now they are telling guys 2,300. No, right. So this is the purchase value, including tax. So normally, guys, remember, if it is including, what you should do is this. Multiply by 15 divided by 115. Now, normally, if it's a percentage, it's, guys, number divided by 100. No? Okay. If it's a percentage, always 100 divided by a number. Sorry, 15 divided by 100 or number divided by 100. But if they tell in the paper, it's including. Including means it's always more than 100. So how did I get 115? Normally, 15% means 15 up, 100 down. Because it's including 100 plus the tax, meaning 115. So guys, now when you work this out, what will happen? Answer will be 300. Okay, now guys, break this down. Meaning 2,300 is with tax. 300 is tax. So therefore, guys, 2,000 without tax. Now, guys, learn the double entry. Right. Now, I'm going to teach you purchase now and then sales later because you may be tested on sales for the exam. So it's like this. Now, this is purchase now. So the without tax answer will always go to the purchase account. So purchase account, guys, should become debit without the tax value. So because purchases became debit, the tax should be debited to the tax account. Tax account should be debit. Okay. So because this is a purchase, without the one will go to the purchase account. Then the tax will go to the tax account, but debit. Think of it this way. Purchase is debit, no? Then tax is also debit. Therefore, guys, what will happen? Because it's a purchase invoice means credit purchases. Okay. Purchase invoice means credit purchase. So credit purchase means what will happen? Credit or maybe trade payable account will become credit. Trade payable control account will become credit. Right. So this has to be the answer. Done. Right. So guys, based on this, now we can select the answer as payable ledger control is credit. Tax account will become debit, sales tax. Purchase account will become debit. And now guys, you can type in the value. That. So guys, if you want, you can copy this down and then I will teach you how it happens for payable. Okay. Sorry, not payable. How it will happen for sales. So just spare me a minute. Okay, I'll resume. Okay, right. Then guys, when it comes to sales, same thing. Okay. Now, if it is sales, guys, what will happen like this? I'll just show it to you guys over here. If it is sales, what will happen like this, guys? Same story. Okay. Let's say 2,300 is with tax. 300 is without tax. Sorry, 300 is the tax actually. And 2,000 without the tax. So if it is sales, you know how it will work, guys. Now, without tax is purchase, no. So here, guys, without tax will go to sales account credit. Tax should always go to tax account. So guys, remember here, if tax is debit, tax should become credit. Here it's trade payable control, then with the tax should go to trade receivable control. And guys, remember, trade receivable control should become debit. Right. So this is your answer when it comes to what you can say, guys. Our tax part. Okay. With sales. Right. So same thing. Actually, guys, if you study one for the exam, you can just apply the opposite and get the other one. Okay. Right. Now, guys, can you try to answer the B part, guys, if possible, over here? So they are asking. Now, this got omitted, no? Because it got omitted, what is going to happen in the financial statements? Okay, because this one got omitted, how will the financial statements be impacted? Not financial statements, how will the trial balance be impacted? Just give an attempt and see whether it will balance or it will not balance. Okay. So guys, understand when something is omitted. When something is, guys, omitted means normally, guys, in accounting, there are 6 errors. Even when it happens, you cannot, the trial balance will still balance. Okay. What are the 6, guys? Omission, commission, principal, original entry, complete reversal, compensating. So even with these 6 types of errors, our trial balance will still tally. So here, guys, it's an omission. No? So even if there is an omission, the trial balance will not fail to agree. Now here, guys, the exam paper says delete which does not apply. This account error will not result in the total of the trial balance failing. So even if the error is there, our trial balance will match. It will not fail. So therefore, guys, the answer is will not. I mean, you delete the word will and keep the word will not. Okay, then guys, let's move on to the next part. Okay. So guys, not task 2. Can you guys little bit try and see, guys, over here? Task number 3. Now, this is related to inventory. Okay. This is related to inventory. Right. Now, guys, quick recap. How do we normally value inventory? Okay. Normally, guys, in accounting, if it's inventory, how do we value? What's the accounting standard? IAS 2. So what does the IAS 2 standard says? IAS 2 standard says when you're selecting inventory, okay, always select the lower of cost or NRV. Now, what is NRV? Selling price minus selling expense. So first of all, guys, what you do is you do it this way. Right. First, guys, now cost is given. Now, guys, you have to do each product separately, not together. Right. Now, take the first product. Now, cost is given. No, keep that. NRV. NRV is not given because they have given me selling price and they have given me selling expense, but not NRV. So, guys, understand in accounting, selling NRV is equal to selling price minus selling expenses. So, what you do, take your selling price, subtract your selling expense, and then you will get the NRV. Okay. Take the selling price, subtract your selling expense, then you will get the NRV. So once you do get your NRV, select the smallest out of the two. The standard says, guys, go for the lowest, no? So select the smallest out of these two. Okay, take the cost, keep it separately, calculate NRV, this one minus this one, then select the smallest. From that selected value, multiply and keep your answer. Like that, do it for super. Like that, do it for elite. Add all the answers, then guys, you will be able to get the, no need to add, my bad, I didn't read the question properly. So super, so standard answer, write it here, super answer, write it here, elite answer, just add it that way and take. Okay, so can you guys take a minute time and try to do this question? I'll give the final answer after that one. Okay. Done, guys. Were you able to get that question sorted out? Shall I explain? Okay. So, guys, first one, what you do, calculate the NRV and keep. So normally guys, what is NRV? NRV is selling price minus selling expense. So 1500 minus 200, 1300, 1800 minus 300, 1450, 2500 minus 600 is 1900, 1900 means 1850. Right now guys, what you do after you get the NRV, just forget about these two. Okay, now guys, what you should do, select the lowest. Now here the cost is 1000. NRV is 1300. So cost is the lowest. Here cost is 1500. NRV is 1450. This is the lowest. Here guys, cost is 2000 and the NRV is 1850. So this will become the lowest. Okay, now guys, what you should do, start multiplying. Take the quantity, multiply it with your circled answer. For super, 50 into 1450. And for elite, the answer is going to be 40 into 1850. So guys, remember, you should multiply and show the answer. Now, I'm only showing the workings over there, but what you should do is, guys, you have to multiply and show the final answer rather than just showing the working. So this is how, guys, we get the answer for the A part. Okay, now, guys, those who can try the B part and see, guys, if you can understand what to do with that question, just try. I'll give the answer. Sure, I will explain that one. Okay, now usually when it comes to inventory, this is what you should do. Okay. Now, first of all, inventory is explained through a standard called IAS 2. So under IAS 2 inventory, our inventory should always be selected at the lowest value. The reason why we select our inventory at the lowest value is because we need to, what you can say, apply a concept called prudence concept. So because we need to apply this prudence concept, we always go for the smallest between either our cost or NRV. Now in our question, can you see quantity is given, cost is given, cost of 1 unit for one product, the cost, selling price of 1 unit, selling expenses of 1 unit. So understand the NRV is not given. So because the NRV is not given, I should calculate NRV. So normally, how do we calculate NRV in accounting? NRV is selling price minus selling expense. So first what you do, calculate the NRV. So how to calculate NRV? Selling price is 1500, selling expense is 200, deduct, get your NRV. Here same way, selling price minus selling expense, get your NRV, selling price minus selling expense, get your NRV. Right, now what you do, once you get your NRV, forget about these two columns. And now select the smallest. Select the smallest means, now for standard, take the cost, take the NRV, have both the values, go for the smallest. Why do we go for the smallest? Because the standard says that. The standard says you have to always select the smallest out of the two. So therefore, guys, out of these two, which is the smallest value? 1000. No? That's why I selected 1000. Between cost and NRV was smallest value 1450. That's why we took that. Between this one and this one, smallest value is 1850. So this is the cost of 1 unit. No, we want the cost of everything. No, now what you selected is the value of 1 unit. We want the value of everything. So if you want the value of everything, what you need to do? Multiply. Multiply it with the quantity that you have. This is how we have to always value the inventory. Please check and see whether you're okay with the explanation. If not, I'll try to go through it one more time. Okay. Right. Then guys, the others, I will try to now explain to you all guys B part. Now B part guys, what they're asking over there, what adjustment should be made to the inventory valuation stated at cost 9,420 to ensure it complies with IAS 2. Okay, now guys, listen. inside our warehouse, we have so much of stocks. Okay. Not only standard, super, and elite. There are so much of stocks in our business where the cost is 9,450,000 or 9,420,000 actually, the value of all of them. Now, in this question, guys, what they are telling is that now see, standard, what happened? We bought it for 1,000, market value is 1,300, and we selected 1,000. Now, guys, ask yourself and see, we bought it for 1,000, we valued it at 1,000 itself. Now, market value is NRV is market value. So, market value is 1,300, no, guys. But we selected 1,000. So, think you bought it for 1,000. You valued it at 1,000. Then are you making any loss on any way? Think and say, guys, carefully. You bought it for 1,000. You're valuing it at 1,000. Are you facing a loss? No. So, from the standard product, there is no loss whatsoever. Now, go to super. You bought it for 1,500, but you're valuing it at 1,450. You bought it for 1,500, you're valuing it at 1,450 means how much of a loss are you facing? You bought it for 1,500, but you're now showing it at 1,400. That means, guys, we are facing a loss of 50. Guys, 50, you're facing a loss for one product, no? Like that, how many products you have? We have 50 products that way. That means our total loss is 2,500 in that case. Right. Elite. We bought it for 2,000, but now the market value is 1,850. See, guys, we bought it for 2,000, but we are valuing this at 1,850. We are valuing it for something less. You bought it for 2,000, but now the value is 1,000. That means, guys, how much have you lost? You have lost 150 over there. 150 we have lost in value for one product. No, guys. Like that, how many products they have? They have 40 products that way. So 1,500, guys, when we multiply by 40, what is the answer, guys, that we are getting? So 1,150 when you multiply by 40, we are getting, guys, 6,000. Right. So therefore, guys, there's 6,000 loss. So therefore, guys, after all the losses, our final answer of inventory will be, no, what they're asking is this. What adjustment should be made to the inventory related that it complies with IAS 2? So, guys, I am facing a stock loss of 8,500, no, guys. So, the stock loss of 8,500, what need to be done is that we have to mark it over here as a decrease. Right? So 8,500 rupees, guys, there's stock loss. So because it's a loss, we have to select the option decrease and delete the word increase. This is how, guys, we answer the B part. Yeah, very good. 6,000, correct, Avi. Okay, so here what they're asking is this. Currently, all our inventory is 9 million. But here, guys, in this situation, when we did the valuation, only one no, we mark it at the purchase price. The other two, we bought it for something higher, but we are now showing for something less, meaning our stock has lost value, stock loss. So stock loss means, guys, we have to subtract now. That's why I'm showing it as a decrease of 8,500. That's a little bit, guys, a complicated question only. But can you guys check and see, guys, are you okay with what I explained over there? Any doubts that you're having, guys, or anything unclear? All okay, no? Right. Right. So, guys, on the earlier question also, guys, if you had any doubts, just let me know. So, guys, now you can copy down the working on how I got the answer. We'll quickly move to the next one. So, guys, I think the prayer is at... Yeah. So, guys, in another 4 minutes time, I will, guys, give you all the break. At 7:25, I'll give the break and we'll go for, let's say, I'll tell you how many minutes and then we can resume after that. Okay, one more question and we'll go for the break. Okay. And guys, let's go to the next part. Okay. So guys, over here, can you guys try and see guys task number 4? So if you then try task number 4, we have finished 2 full questions. So which is equal to like finishing a real paper. Now, normally guys, in the real paper also, you will be getting 2 questions. That means you won't get the same chapter 2 question. That will never happen. But you understand, no? In section B, we will have 2 questions, each worth 15 marks. So if we do finish task number 4, then we have finished 2 full questions, which is it will come for the exam. That's good. And maybe we can do another 2 later after the break. Okay. Can you guys do the last one, guys, for me over here quickly? Try to do, guys, task number 4. It is something related to what you can see. It's something related to intangible asset. So they are asking amortization. Guys, what is amortization? Amortization is like depreciation. Now, for the non-current asset, we are charging depreciation, no, guys. Like that, for the intangible asset, we charge something called same thing, but we call it amortization. So it's like calculating depreciation, but you name it as amortization. Then, guys, carrying amount. Normally, guys, how do we get carrying amount? Carrying amount is equal to cost minus amortization. Like cost minus depreciation, like that, guys, cost minus amortization. Can you guys take 2 minutes time and quickly answer A and B? I actually gave the answer for the A without knowing, but okay, anyway. Try to get the answer done, guys, for A and B quickly. Okay. So, guys, what does it say? So you're buying a license. So, guys, remember, when you buy a license, what will happen? If you buy a license, it will become an intangible asset. Okay. If you buy a license, it will become an intangible asset. Right. Then, guys, next part, amortization. So normally, guys, how do we calculate amortization? Like this. Take the cost, like taking depreciation, cost minus scrap value divided by useful life. Same concept. Take the cost, which is 2 million. Does it have a residual value? No. 0 divided by useful life, 5 years. So therefore, guys, when you divide by 5 years, what is the answer? When you divide by 5 years, answer will be 400,000. So that will, guys, be the amortization. Right. So then, guys, carrying amount. So normally, guys, how do we calculate carrying amount? Carrying amount is equal to like this, cost 2 million minus amortization, which is 400,000. So therefore, guys, 2 million minus 400,000, answer is 1.6 million. This is the carrying amount. Okay. Now, guys, the time is 7:25. Let's, guys, have a 20-minute break. Let's pray and come back, and then we will continue the session. After that, we'll do 2 more section B questions and see. Right. So have a 20-minute break and come back, guys, then. Okay, right. So guys, let's continue then after the break. So now guys, what we will do is now I think we did 2 questions on the exam kit, right? Okay. So I think guys from the exam kit, now the questions are enough. Let's try to, what you can say guys, jump into this question over here. Yeah, let's guys directly go into this part over here. Our okay. So guys, remember this is so this particular exam, guys, even y'all can now open up here. Okay. This one, guys. So once you go to if you just type guys in Google, right? ACCA FA mock exams, this is the first thing that you will land on. So this particular thing guys that you see here on the screen is from the ACCA website itself, right? So you can just have a look at this exam over here. It's a full exam. So this is how your paper will come. An engine similar to this. So in this particular question, guys, what I'm now going to start practicing with you all is the section B related question, not section A, section B. So we'll directly jump into that question, guys, over here, which is 36. So 36, guys, is a question that is related to consolidation. Now, consolidation, guys, next Monday, I'm teaching you SOFP. The week after that, I'll teach you income statement. So these questions we'll practice at that point. Right, now guys, let's move on to this question, guys, over here. Now, this is related to our financial statement. Okay, so let's have a look at, guys, this question over here. Malrite Corporation has an accounting year up to October. Okay, so guys, keep this in mind. We are having an year end up to October. The accountant is preparing the financial statements as at 31st of October 2007. A trial balance has been prepared, but no year-end adjustments have been made. Right. Task number 1. Should each of the following amounts used to determine the figures to be reported in the statement of financial as at 31st of October 2007 before any year-end adjustments? Okay, now guys, they're asking you, to the SOFP, should you be taking these? That's what they're asking, guys, over here, the first one. Right? Should you take these numbers to the SOFP, yes or no? Right. So guys, number 1, SOFP, guys, normally what do we take? Normally to the SOFP, guys, we take assets, liabilities, equity, correct or wrong? So they are asking, which will you take to SOFP? So guys, building is an asset, no? So I'll select yes. I'll be taking that to the SOFP. Okay. Right. Then guys, building accumulated depreciation. Yes, accumulated depreciation is also, guys, something that we take inside the SOFP. Right. Non-current asset, no. Plant. Do we take plant? Yes. Plant is also, guys, and what you can say, a non-current asset. So SOFP. Plant accumulated depreciation. Yes. SOFP, non-current asset. Bank balance. Yes. Bank sometimes is an asset, sometimes a liability. Now, in this question, guys, over here, bank is a liability because bank is credit side, no? So if it is on the credit side, it's a liability. Right. Revenue. So, guys, revenue is where? Revenue goes to income statement, not SOFP, no, guys. So, no. Purchasers. That also, guys, where? Income statement. Inventory on first, opening inventory. That also income statement. Right. Cash. Cash is current asset. Yes. Trade payable. Yes. Current liability. Trade receivable. Yes. Current asset. Then, okay. Administration expense. No. Administration expense we don't take because it's income statement. Allowance for irrecoverable debt on first. Normally, guys, remember allowance for irrecoverable debt. Opening balance, we never take it to SOFP. Okay, opening balance, we never take it to SOFP. It's the closing balance that we normally take, not the opening balance. So therefore, the answer is no. Retained earnings on 1st of November. Again, guys, remember retained earning on 1st of November, no guys. So 1st of November means that's the opening balance once again. So normally, guys, to SOFP, we have to take the closing balance. So that's one no. Equity shares, yes. And share premium, yes. But retained earning also, guys, maybe we can tell that one also, yes, but the date is the problem. Okay, so maybe, guys, retained earning also, if we put it as yes, then maybe we would get the no. Retained earning is no. Okay. So this is what, guys, you have to do, guys, on this particular question in order to get your answer. You just have to label whether it's going inside the income statement or no. Okay. Right. Now, guys, let's move to this question, guys, over here. This part. Task number 2. Okay. Right. Now, guys, for task number 2, you need to little bit consider these when you do the question. Okay. Right. This part. So I'll tick and give for you, try and see, and then I will explain how to do. Okay, so we have trade receivable, administration, not administration expenses, that is not relevant, right? Allowance for irrecoverable debt, right? So guys, by taking this point and this point into consideration, can you try to do now, guys, task number 2? So I'll give you around 2 to 3 minutes time. Just check and see, guys, whether you're able to do, guys, task number 2 using those two information, trade receivable and the allowance. Okay, right. So guys, were you all able to try the allowance part? So shall I give you a small recap on allowance? Okay, now guys, this is how you are going to do allowance in accounting. Right. First of all, guys, when it comes to allowance, if it's a percentage, have like a small T account ready. Okay, so we'll label this and keep it as allowance. Done. Right now, guys, when it comes to allowance, this is what you need to do. Step 1, brought forward. Always remember, guys, in the allowance account, the brought forward is always credit. So you go to the allowance account, credit side, you mark there brought forward, which is going to be 10. Here, guys, can you see allowance for irrecoverable debt? Answer is 10 on the credit side. Right. Second thing, guys, what you need to do is you need to then mark the carried down. Right. Now, usually, guys, how do we get the carried down? For that, there is a formula. What's the formula in accounting? Trade receivable. Sorry, it went up. Okay. So what you should do is, guys, number one, trade receivables minus irrecoverable debt, multiply that by a percentage. That's what you have to do. Okay, this is the formula that we normally use to get the carried down. Trade receivable minus irrecoverable debt multiplied by a percentage. Now in our question, guys, trade receivable, can you see 320? Irrecoverable debt is 0. Guys, remember, allowance for irrecoverable debt is different. Allowance means what? Doubtful debts. So allowance is different. Irrecoverable debt is different. Irrecoverable debt means bad debt. 100% confirm that he won't pay. So you have to read your adjustment and see, is there something called irrecoverable debt? Now, what do they say here? The allowance for irrecoverable debt is 5%. That's it. Nothing else is mentioned. So that means, guys, irrecoverable debt is not there. 0. If it's there, they will mention in this adjustment. So therefore, guys, that's 0. And that one, guys, what you do, you multiply that by none other than how much? 5%. So, guys, you will get 16. That 16 will become the carried down. Okay, now, guys, what you do? Now close the account. So when you close the account, what will happen? Once you close the account, it will become 16 over here, 16 over here, 16 minus 10. Income statement will be 6. This is the answer. This is what they are looking for. Okay, right. Right. Now, guys, see what they're asking. What is the journal entry for the allowance for irrecoverable debt? Now, we got 6, no? For this 6, they are asking, what is the double entry? Now, guys, this 6 is coming on what side? Credit side. Credit side of what account? Allowance. So, therefore, guys, allowance for irrecoverable debt, credit. Done. Okay, so allowance for irrecoverable debt will become credit. And now here I wrote IS, no, income statement debit. But do I have an option called income statement? No. So let's check and see. The irrecoverable debt is an administration expense. That means in the income statement, we have to mark it as an administration expense. Then the administration expense will become debit. Okay. But then, guys, can you see I have got only 1 out of the 3 mark, meaning we have to select all options. Trade receivable, then there is no impact. So no debit or credit. Revenue, there is no impact, no debit or no credit. So therefore, guys, this has to be your answer. Task 2, for this part, this is how we get the answer. Now, guys, you might be seeing only 2 out of 3 marks. There's another one part down, so that we have to scroll down. So can you guys check and let me know, are you okay with what I have done so far before I scroll down, guys, faster? Okay, so seems everyone is okay. So now, guys, based on this one, can you give me the answer, guys, for this part over here, please? Right, this one here. Now we actually have the answer in our hand. It's just that now, guys, you have to write properly and show. Okay, can you guys now decide the answer for this one? They're asking in the profit and loss account, how much you're going to show as allowance. We have the answer. We found it. Okay, so guys, what should be the answer for that one? Inside the profit and loss account, the irrecoverable debt is going to be how much, guys? 6. 6 should be the answer. Okay, guys, administration expense, how much did you take? 6,000. No, guys. So therefore, this has to be the answer, 6,000. So if you put 6, enough. Right, so can you see 3 out of 3 full marks we have got? Right, guys, one more small thing I'll just tell you additionally so that you are covered in all bases. Guys, listen. This carried down is there, no, guys? This carried down will go to current asset in accounting as a negative answer. Sometimes they may ask this question in the exam. In current asset, what are you going to show? Normally, guys, in the current asset related to this area, we have to show 2 things. So normally in current asset, we have to show trade receivables, which is 320. And below this, we have to mark and show, guys, allowance for irrecoverable debt, which is 16. Like this, you have to mark it and show. Okay. Under current asset, trade receivable will be 320. and allowance for recoverable debt, guys, will become 16. Like this, separately, you have to mark and show 320 and 16. This is how, guys, you are supposed to do that part. Right. So, guys, are you okay with that part, guys, over there? Little bit check and see. That is, if they have asked a question, they haven't asked a question, but if they ask an additional question, guys, this is how you are going to answer it. This is current asset, and it's going to be a negative answer. Okay. Now, guys, let's try another one question, guys, from this mock exam. Yeah. Okay. This part, guys, over here. Let's go down to the next question. Okay. So first of all, guys, can you quickly read the question, guys, over here? And then I will show you the data. Okay, right. Check and see, guys, over here. Task number 3. Okay, now, guys, what are they actually, guys, asking that question? What is the journal entry for depreciation? Now, guys, journal entry for depreciation means they are asking what is the double entry for depreciation. Now, normally, guys, what's the double entry for depreciation in accounting? Double entry is depreciation debit, provision for depreciation credit. Now, depreciation debit means it's an expense, no? So normally, where is depreciation marked in the ACCA exams? Normally, guys, ACCA exams, depreciation, we mark it in cost of sale or administration expenses most of the time. But don't worry, they will, guys, normally tell you where to go and mark that. Here they're telling, no, depreciation is treated as a cost of sale. Okay, so normally they will mention where to go and mark. It will never be vague in the exam. It will never be unclear. Provision for depreciation credit. Provision for depreciation means accumulated depreciation credit. So this is the double entry, guys, that we have for depreciation in accounting. Now, shall we quickly check and see the answer? So what happened, guys? Now, here depreciation is charged to cost of sale. That means not administration expense. Therefore, guys, you have to select no debit or credit. Cost of sale, we have to mark. So can you see here, guys? Cost of sale debit. So mark that one, done. Building. Normally, guys, depreciation, we don't charge it to the, we calculate on the building, but we don't put it to the building. So building cost, there is no changes. Plant cost, there is no changes. But yes, provision becomes credit. Accumulated becomes credit. That means building depreciation should be credited to building accumulated. Plant depreciation should be credited to plant accumulated. This is how, guys, you have to get the answer. Sorry, my bad. I selected the wrong options. Here it has to be credit. Here also, guys, it has to be credit. Done. This is how you get the answer for task number 3. Right. So, guys, any area, guys, that you're unclear, just let me know. Then I can explain one more time. Okay. Now, guys, they're asking you to calculate the depreciation. So for that one, guys, we have to go up. Okay, guys, can you do a small work for me? Can little bit now. In your exam, guys, you can scroll up and down, no? But now since I'm screen sharing, you may not have that feature. So therefore, guys, can you do a small work for me? Just read this, or maybe I can copy paste this for you. Okay. Now, guys, let's go up. And can you now please start to calculate and show depreciation? Okay. So, guys, I have given you now all the information over here. Right. So, guys, now can you read this part and calculate depreciation for me faster for plant as well as the machine for the building actually. So, guys, just read this part and calculate depreciation for the plant and building, guys, quickly. One year. We have to calculate depreciation for 1 year. Okay. One full year. Okay, right. So guys, can little bit check and see guys your answers. So first one, plant is on reducing balance method. So reducing balance method means guys, what's the equation? Take the cost, subtract the accumulated depreciation. So you will get and put that into 20%. Whereas guys, if it is building guys, normally how do we calculate depreciation? Building guys, depreciation will be like this. Yeah, take the building cost. That's easy, 740, and multiply that by 5% because that is on straight line or on their original cost. So therefore, guys, based on this, your answers will be 220 minus 110. That into 20%. Answer is 22,000. 740 into 5%. Answer is 37. So these are the two answers, guys, what you should have got. Pretty straightforward. So you can just mark it, guys, over here. Right, here we go. So guys, building answer is 22,000. Sorry, building answer is 37,000. So guys, in the exam, read carefully. See, first they ask plant and then they give building and they swapped it in the option. So don't make the mistake that I did now. Right. So plant answer is 22,000. Done. Okay. So, okay, now guys, full 5 marks we were able to get. So like this, guys, basic questions only will come. So you need to just be thorough with your basics. All good, right? Let's go to the next question, guys, over there. Right. So in the next question, we have what they're asking. Okay, task number 4. Right. So guys, they're telling, okay, let's read this and see. Let's see what they're asking. Okay, so now guys, they are telling the closing inventory is 75,000. Okay, now guys, they have given you the closing inventory. Now they are telling ignore the depreciation. Because guys, in the earlier question, depreciation is charged to cost of sale. No? So they are telling this depreciation, what you calculate, just forget about it completely. So by forgetting about the depreciation completely, now the examiner again wants you guys to calculate and show cost of sale. Okay. Again, he wants you to calculate and show cost of sales. So I will guys now clear the depreciation working from the screen. So here is the closing stock. Right now, guys, can you start calculating cost of sales? So can you guys remember today when we started the paper also there was a question on cost of sale, right? Same question only they will normally repeat. Right. Here is your closing stock. Right. Please calculate guys cost of sale and take it. Okay, done guys, got your cost of sale. Should not have taken you that long. It's easy. Right. So normally guys, how do we get cost of sale? So first we need opening stock, then we add the purchase, then we add carriage inwards, subtract return outwards. If there is any drawing of stock, we have to subtract, but I don't think there is, minus the closing stock. Right now guys, let's start. Closing stock is 75,000, like how the adjustment said does. Opening stock, what's the opening stock? 160,000. So these are without the zeros, okay? Right, purchases, how much is purchases? 1,140,000. So understand, guys, net purchases. What is net purchases? After the return. That's what we call net purchase. Okay. Do we have carriage inward in our question? No, there is no carriage inward. Okay. Now, guys, can you then get your cost of sale? So therefore, guys, cost of sale would be 160 plus 1140 minus 75,000. So 1225 is your cost of sale. So guys, now let's go and type that answer over there. What's the answer? Right. 1225. That's the answer. Correct. Okay, no? Right. Now, guys, last part. Task number 5. Okay, guys, remember when you do task number 5, just keep in mind our question. Wait, anyone who is copying, guys, you can copy this down. Our question is finishing on 31st October 2000 X7. Okay, this particular question is finishing on 31st of October 2000 X7. So keeping this in your mind, now guys, can you try to get me the answer, please? Okay, right. So, guys, shall I explain? I think that's a little bit of difficult question, no? Okay, let's see. An invoice for 15,000 for energy cost for the quarter ended 30th of November 2007 was received in December 2007. Energy cost is administration expenses. Okay. Right. Now, this is what, guys, you need to do. Now, first of all, guys, you have to understand. Now, see, 15,000 is for the quarter ended November. No? So, usually, guys, a quarter, quarter is 1/4, but usually for a year, quarter is 3 months. Do you understand that part? In one quarter, there, now, for an example, guys, January, February, March. 3 months is considered as one quarter. So, here, guys, when they say a quarter, it's for 3 months, meaning it is for November, October, and September. Ending November, no. Ending November means not after November, before November. So November, October, September. Right. Now, guys, see our question. So, see, guys, for the quarter, it's 15,000, it seems. Okay. For the quarter, it's 15,000. So, guys, for the quarter, if it is 15,000 in the sense, for 1 month, the rate or the energy is 5,000. 5,000 for November, 5,000 for October, 5,000 for September. This is your answer. Okay. Now, this is what, guys, you need to do. Now, our question is finishing on October now, guys. So that means this November 1 will not become relevant. Since we are doing our question for what you can say October, this November 1 will not become relevant. Only these two we need to consider. Okay, because our question is finishing in October. So whatever comes after October, we don't have to worry about. So remember, guys, we just got the bill. So that means we haven't paid it. The bill for this year we received in December. Right? So therefore, we haven't paid it. So when you don't pay it, what happens? End of the day, guys, it's anyway again energy cost, no? So that link energy cost is administration expense. So expense means expense is always debit. So therefore, guys, what will happen? Administration expenses will become debit. Okay. And the only other option that I have is accrual. So accrual should become credit. Because why accrual? For this year, you haven't paid. Because you got the bill itself next year only. So for this year, you didn't pay. So it's payable. So therefore, guys, it becomes accrued. So accrued is a liability, no? So normally, guys, in accounting, liability is credit. Energy cost is an expense. Expenses are normally debit. Right. Now, the next question, what they're asking from you, what is the amount to be posted within the year-end adjustment double entry? So they're asking what's the amount you're going to show for October. So for October, guys, how much we have to show? 5,000 only. 10,000 we have to show for October. Right? Because that last 5,000, it doesn't, it's not relevant for this year, no, guys. So because it's not relevant for this year, we are not going to mark it over there. Only 5,000, 10,000 we are going to show inside our adjustment. The other 5,000 is relating to the next year. So this is how, guys, we need to do this question over here. So with that one, guys, here you can see 100% the question is complete over there. So with that, we have finished our third question from section B. Okay, which is equal to 1.5 papers. Think, guys, we have time to do maybe another one question. Still, we have half an hour left. So let's make the best use of our time and then we will wind up. So next week, guys, consolidation. Let me just little bit check and see, do we have a Telegram group for the TRG? Okay, so seems like, guys, for TRG, we still don't know whether we have a group. We have a group. Okay. So then I'll ask the administrator guys to add me to the. Yeah, no, exactly. That's why I just checked this one. I think I'm not there yet. They might have forgotten. So guys, what we will do is anyway, I'll just request them to add me. So once they add me, guys, I will share some materials in the group, which will be helpful for you to get ready and come for the next class. Because next class, because I'm planning to consolidation, so I want to share a small short note on consolidation before we come for the class. So if you can go to the short note and then come for the class, it will be easier for you to understand what I'm saying. So I'll just ask the admin to put me to the group and I'll share those materials. Okay, right. So guys, now we have time to do one more question on section B. So unfortunately, guys, in this specimen set, we have just one question on financial statements. Other one is consolidation. So we can't do that now itself. So we'll go back to the exam kit, guys, that I was using, right? One last question, guys, for today, and then we'll finish off. Okay. Okay. This one, guys, over here, Clark Corporation, task number 1. So guys, here, can you read this and see? What is happening is a bad debt, irrecoverable debt. So they are simply asking for irrecoverable debt, what is the double entry in accounting? That's what they want. Okay. There's an irrecoverable debt. For the irrecoverable debt, they are asking you what is going to be the double entry. Right? Can you guys quickly read that question and guys try to select the double entry if possible? Okay, so guys, normally what's the double entry for bad debt, guys, in accounting? The double entry for bad debt is what? Irrecoverable debt we have to select. So it's 3,500, no, guys. So we have to take 3,500. That's the answer. So what's the double entry, guys, for bad debt? Double entry is bad debt is an expense. So therefore it's debit. Okay. And normally, guys, bad debt is caused by whom? Trade receivable. So therefore, guys, trade receivable account will become credit. Simple as that. They're asking just a double entry for the bad debt. That's it. Okay, right. Right now, guys, then can you try to do B part, guys, over here? Just read and see. Offset. What is offset? Offset means, guys, set off. So they are asking from you guys over here, when there is a set off, what are the double entries to be posted? Okay. When there is a set off, what's the double entry in accounting is, guys, what they're asking. Let's try and see, guys, over there. Okay, done, guys, with that part. So normally, guys, for a set off, what's the double entry, guys, in accounting for set off? So normally, if it's a set off, what happens? We use which and which account? We use trade payable account and trade receivable account. So normally when there is a set off, guys, trade receivable reduces. So trade receivable is an asset. When asset reduces, it has to be credit in trade receivable, because credit here, debit inside trade payable. Set off is where the same person is a customer and a supplier, no, guys. So we should get money and give him money. So because we should get money and give money to the same person, what we do in accounting is that, guys, we cancel off each other. So when we cancel off each other, what we need to do is that, okay, we have to reduce our customer. So trade receivable is an asset when he reduces credit because of that trade payable debit. That's how, guys, you need to answer it. Right. Then, guys, going down, next part. Okay, now guys, this is a question that is coming from the discount lesson. Okay, now there is a chapter now, guys. Now this is also again connected to the chapter sales tax. Now we have a chapter now, guys, like this, tax and discounts. Like that, we have a chapter now, sales tax and discount. So therefore, guys, when we have a chapter like that, in this discount chapter is where there's a situation where, we expect people to pay. Sometimes they end up paying early. You don't expect them to pay, then, you make some changes. So this question comes from that part. 2 minutes time, try and see. If not, I'll explain the whole question, meaning the chapter also, guys, will get covered using that. Just check and see, guys, whether you're able to do. Okay, right now, guys, this question, what does it say? Right. So you have been asked to confirm some accounting entries related to sale transaction with a customer with a list price of 2,000. Customer is entitled to a 10% trade discount. Okay, now, guys, understand. Thing is this. Now, our selling price is 2,000 now, guys. But there is a trade discount involved. So normally, guys, when there is a trade discount involved, first you see the trade discount. So normally, guys, in accounting, do we ever record trade discounts? No, right? We never record trade discounts in accounting. So what we do with trade discounts, we subtract it. And the balance answer is what we consider. Always remember, guys, in accounting, once you calculate the trade discount, this 2000 or the trade discount is now irrelevant, ignored. Only 1800 you have to worry going forward, because in accounting, we never record trade discounts. Right, then what happened? A 5% early settlement discount is given. If the payment is made within 10 days, the customer is expected to take the advantage. Now, guys, see. Now, the customer is expected to take the advantage. No, so because customer is expected to take the advantage, you guys think and see, will he pay 1800 or will he pay something less? Think carefully and see, guys. Now you're expecting him to take the another 5% early settlement discount. Now extra 5% you will give if he pays early. Now you are expecting him to pay early. That means you expect him to pay 1800 or something less. Because you're expecting him to pay early, guys, something less only he will pay. So therefore, guys, what you will do, you will immediately calculate that now itself. Another 5. Now, if you guys didn't expect him to pay early, now you have given an offer. If you didn't expect him to pay early, then the final answer is 1800. Because if you're not expecting him to pay early, he won't get that 5%. No? So then final answer is 1800. So meaning, guys, for 1800 only, we have tried the double entry. But here, because you're expecting him to pay early, another 5% he will take, then, guys, the answer will be 90. So therefore, guys, once you subtract 90 from this, final answer is 1710. So what is this transaction? This is a credit customer. Credit customer means this is a credit sale. So normally, guys, in accounting, what's the double entry for credit sales? Credit sale double entry is sales account credit and trade receivable account will become debit. So therefore, guys, revenue is sales 1710. Trade receivable is this one 1710. Revenue will become credit. Trade receivable will become debit. Let's say, guys, for an example, you didn't expect him to pay early. Then I said the final answer will be 1800. So double entry will still be the same, but the answer will be 1800 if you didn't expect him to pay early. If you didn't expect him to pay, no need to calculate the extra 5%. Because if you didn't expect him to take advantage, he will pay 1800. Now, so for 1800, this double entry should be passed. But for the question, this should, guys, be the correct answer. Okay, right. So, guys, then with that one, that question is also done. So, guys, you can copy the working and let's go to the down part of this question. Okay. Okay, right. Now, guys, over here, guys, they're asking you to prepare a bank reconciliation statement. Okay. Try to do this part, guys, over here, a bank reconciliation statement question. Okay, right. Now, guys, this particular chart, what they have given, guys, might be confusing for you. Now, sometimes, normally, guys, for the students who studied FA with me, what I teach, guys, for you all is something like this, no, like this. Updated cash book balance. What is that one? Balance as per adjusted cash book. Then, guys, we normally add unpresented checks. Then we normally deduct unrealized checks. Okay, and then sometimes, guys, there are bank errors. Sometimes there are mistakes being made by the bank. No, then we have balance as per bank statement. So this is how, guys, normally the question is done. No, updated cash book balance, unpresented, unrealized, and balance as per bank statement. Right. So this is how, guys, it's supposed to be done. So normally what we do now, here they have given, guys, debit balance of the bank statement. Now this structure is confusing. So I'll do with the normal structure, then I'll connect it and show. So normally, guys, balance as per bank statement, if they tell debit, that means that's a negative balance. Okay. Bank statement credit is positive. Bank statement debit means overdraft, negative. Right. Then, guys, what we need to do, they are telling over here, checks not yet presented. So not yet presented means, guys, unpresented check. So I'll mark it over here, 2,400. Then unrealized. Unrealized is what we call, guys, lodgements not yet cleared, 3,400. Okay, guys, understand. Now they are given you to confuse. See, delete as appropriate. Guys, normally checks returned by the bank means dishonored checks. Understood? Checks returned by the bank means dishonored checks. Normally, guys, dishonored checks will not come inside the bank reconciliation. Dishonored checks are coming inside adjusted cash book, not inside the bank reconciliation statement. So therefore, guys, this is not needed. Now, what the examiner wants us to do, he wants us to, guys, find this answer. Okay, that is what he wants us to find. Or maybe he wants us to find both. Using the information available to you, complete the bank reconciliation as at 31st of December 2017. So they want us to do the bank reconciliation, but this is also given. Okay. Quite confusing. What do they actually want? Okay, anyway, guys, let's check and see what let's do the question, see like normal. So anyway, then in that case, I will just keep that one. Okay. Because I don't think, guys, they have allowed us to delete this, because what they have allowed us to delete is a star. No, can you see? Delete as appropriate. So what they want delete is these two. Okay, so then first, guys, what we'll do, we'll find this answer. So then, guys, what you should do is you need to work backwards, right? You need to work backwards means take minus 1,500. Okay, start with that. So no, guys, normally when we work backwards, what will happen? Opposite. When you work backwards, minus will become plus, plus will become minus. So therefore, guys, the answer will be minus 1,500 plus 3,400 minus 2,400. So the answer is, guys, coming as minus 500 over here. So here, if I am to enter like this, not presented is 2,400, right? Not realized, guys, will become 1,500. So therefore, guys, over here, final answer is 500 negative. So normally, guys, cash is negative means it's a liability. So because it's a liability, correct option, guys, has to be over here, credit balance, right? Then there is a check returned by the bank. So check returned by the bank, guys, I should mark it over here as 1,000. So normally this is how it would work, right? Now, normally in class, once we, guys, get this answer for 500, okay, now it's minus 500 now. So once we get the answer for minus 500, what we do? We draw the adjusted cash book. I mean, this is how I usually do it in the class. Maybe you all have done something different, but still end answer is same. So normally, guys, in the adjusted cash book, this 500 what we are getting is the brought forward over here. No? So brought forward, again, guys, small mistake, sorry. Because the answer is a minus answer, okay? This is brought forward on credit side, like this, brought forward 500. So normally, guys, brought forward now will go to the opposite side as carried down 500. Now, guys, there is something called check returned by the bank. Now see, guys, this check is given by the customer now. When customer gives the check, it's normally debit. But this is return, no? So opposite side. So therefore, guys, we need to write over here dishonored opposite side. How much? 1,000. Okay. Now, guys, what we need to do once we mark the 1,000, we need to now close the account. So forget this 500. Now close the account. 500 on this side, 1,000 on this side. So 1,000 over here, 1,000 over here. So therefore, guys, brought forward will become 500. So 1,000 minus 500, guys, brought forward is 500 now. So this brought forward 500, what we have over here, now it's coming on the debit side. So therefore, guys, over here 500 and the answer has to be debit. Okay, so little bit of a confusing question because they made us do the entire thing to get the answer. So I also, guys, got stuck because even I didn't realize what they were actually asking at a particular point, and then only I figured what they wanted. Okay, so guys, can little bit check and see, guys, whether you were okay with my working, because I also got a little bit confused. So I just want to know that whether you're okay. Just check and let me know, guys, over here. Yeah, the last part I will explain. Right. So the last part, what you should do is like this. I'll make my work a little bit more neater. Wait, okay. Okay. So this is our adjusted cash book. Right. Right. So normally in the adjusted cash book, what we do is that like this. Now, normally how it works, we do the adjusted cash book. That one's balance, no, we take it over here. Now, today what happened? In today's question, we are actually doing a reversal. That means we are starting from the last answer and going all the way backwards. So we are going back on our work. So normally how it works, we close the adjusted cash book, get the carried down and the brought forward. And that brought forward, now we mark it here as updated cash book balance. Now it's the other way around. Today we are going other side. So see, because here the answer is minus, we considered it as a credit balance. No, that means this is a credit brought forward 500. So from here, we mark the answer here. From this 500, we copy it here. Now, normally in accounting, carried down, no, we take it to the other side as brought forward. So therefore, if brought forward is this side, that carried down should be on the opposite side, debit side, like this. Done. So the arrow is how we need to do the question. Then there is a check return. So normally check return means dishonored check. Dishonored check, we are normally marking on the credit side. Why we are marking that on credit side? Because normally dishonored, now see, this is a customer's check now. So if it is a customer check, normally we mark it on debit. Why? Customer check means money that we are getting now. So when we get money, it's debit. So because this got cancelled, I also have to cancel my transaction. So I am cancelling my transaction means I have to put to the opposite side. That's why dishonored became credit. Right now, last part. Now forget this 500. Don't think about this. Now compare these two sides and see which side is highest out of the two. This is the highest one, no? So therefore, we bring this 1,000 down. The same 1,000, we bring it here. So 1,000 minus 500 now brought forward is 500. So this 500 only, I put it here. and it's on the debit side, no? So we selected that as the option. Right now, little bit check and see, are you okay with that part? Because here my work also was not neat, so you wouldn't have understood. Now just check and see, are you clear or still doubts? No, okay, no? Right. Um, you're having it as 1,500. Can't be, no. Because sometimes these exam kits do have a few errors, not that no. But yes, I also have the exam kit answer sheet now. I'll check and see. Sometimes these do have mistakes, not that no. Let me check and see, did I make any mistake by any chance? I don't. Yeah, this part, guys, what they have done here is wrong, guys. Okay. This, I mean, until this part, we did it correctly. See, 500 credit, no. But then, guys, I think you can see my screen. This 1,000, guys, what they did is wrong. This 1,000, these people have taken it to the debit side. That's incorrect now, guys, because see, now let's forget about my answer and let's forget about their answer, will you? Right. See, check return unpaid by customer bank. Now think and see, guys, normally when a customer gives a check, where do we mark? If customer normally gives a check, first money comes in, no? So when money comes in, we normally put to debit. Shall I show you guys how they got the answer? They got the answer, guys, this way. Let me do the working and show it to you. Right. They got the answer like this. Right. Now they also got the same 500 what we got. Okay. So therefore, guys, what they did, they have done like this. This 500 we got credit, no? So they also have got credit, brought forward 500 credit, bring it to this side to the carry it down. And what they have done, the dishonored is there, no, guys? That dishonored they have put to the debit side, like this 1,000. That's how they got the answer. See, dishonored 1,000 plus 500, guys. When you add together this plus this, they are getting 1,500. And that 1,500 they went and put here, and then they are getting the brought forward over here as 1,500. That's how they are getting the answer as 1,500, which is wrong. Because let's forget all our answers. Let's focus on the basics. Let's focus on theory. Normally, when customer gives a check, it's debit, because when customer gives a check, money comes in. Bank debit, customer credit. And when this get dishonored, guys, we have to cancel it now. So we have to mark this on credit side. If this was a check given by the supplier, then what they have done is correct. But this is, guys, a check that got cancelled by the customer's bank now, guys. So meaning it's a check that we got, meaning it's originally debit. So because we have to cancel it out, we have to mark it on the opposite side. That's why I marked to the credit, guys. This has to be the correct answer. What they have done is, guys, theoretically wrong. Okay, so therefore we cannot consider that one. Okay, right. So guys, then with that, then I will then conclude today's session, guys. I think we have done, I think, almost 2 papers worth of questions. We did very close to 2 papers, only a few, but time doesn't permit. So we'll, guys, then conclude the class at this point. So I'll speak to the admin. Once they add me to the group, guys, I'll share some short notes. Please go through them. Then when you come for class next week for consolidation, it will be very easier for you to understand the lesson, because then you will be familiar with my methods. Okay, right. So guys, and that's it then for today. Then I'll see you all, guys, again next Monday at the same time, 6 p.m. we'll meet. Right. That's all, guys.